previous segment on disability income policies and insurance, I talked about the implications about an individual, I guess, becoming disabled as it applies to the business marketplace. And so if we have a small business and we talked about the implications and the risks to that business, if in fact one of the key shareholders or one of the key employees becomes disabled, it can be a significant issue. I don't know if any of you are in the restaurant business, but if your chef is sick one day or sick for 2 or 3 months, that has a significant implication for that business. So as we know, there are 2 or 3 people usually are key to many small businesses, and if something happens to that person, they're unable to be at work for a short or longer term, that can be a significant risk to the business. And so when we talk about risks to a business owner, statistics have shown that for the average 45-year-old male, there is a 40% chance of suffering a disability lasting longer than 90 days prior to age 65. So that's a significant risk. And in fact, in many situations, the average duration of the disability tends to be around 4 years, 4.3 years statistically. So 40% of males age 45 could incur a disability lasting 90 days or longer in the case where they are in fact disabled, it can last up to 4.3 years. So significant implication if that person is a key person in a small business operation. Now, if one of the principals becomes disabled and is unable to continue to work, there is an issue. And in fact, someone needs to take over the ownership, management, and running that company if that shareholder or partner is unable to come back to the organization and function at 100% capability. And in many cases, that business tends to be the key asset for the family. And so the family's retirement income, the family's ongoing income is all linked to the business. So if the principal is unable to function up to capacity, there are significant implications for current income to the family and also future retirement income, because in most small businesses, the objective here or the hope here is that when it's time to retire, we're going to be able to sell that business and use the proceeds to fund our retirement income. So becoming disabled puts a real spanner in the works with respect to those financial planning goals and objectives. And similarly, it doesn't have to be a shareholder, could be a key employee. If you lose a key employee, could be your key could be your key salesperson, could be your key IT person if you are in a software development company. Doesn't matter, there are key people in every company, and so businesses are at risk if those individuals become disabled, whether it's a short-term or long-term. So the insurance industry is providing products that can allow these types of issues to be at least softened or managed through providing disability income coverage. I want to talk today about one specific type of policy, which is called a business overhead expense policy. And so disability business overhead expense is designed to keep the doors of a business open while the principal might be disabled for a short term. So in many situations, as we know, the principal tends to be the individual that's generating the income. This could be a dental practice, could be a doctor's practice. It could in fact be a pharmacy, where, as you know, unless the pharmacist is there, no dispensing of drugs can take place. And in a lot of metropolitan areas, pharmacies, Rexall Drugs or Shoppers Drug Mart would in fact have roving pharmacists that can go around and assist those pharmacies in the event that one of the owners or one of the key pharmacists becomes disabled. However, If you're in a smaller town, in a smaller location outside the metro areas, this becomes a significant challenge. If the pharmacist cannot show up, you cannot dispense any drugs, and that business is going to suffer. If the dentist is not there, no income is being generated, and the assistants, the hygienists, and the people working in that dental practice are no longer going to be able to be paid. And so if I have a toothache, the reality is I'm going to go to another dentist. So that business stands the risk of losing customers to a new relationship that could be formed. So making sure we can keep the doors open is very important during a short-term or longer-term disability. So disability business overhead expense policy provides provides a monthly payment to cover business overhead. Now, what do we mean by business overhead? Well, that's simply things that keep the door open. Light, utilities. We may have rent that we have to cover. We may have salaries of our staff. So all of these things are overhead. And if in fact the principal of that business is not functioning, is not able to work, then the business has no income coming in, and it's going to have a problem meeting those expenses. So business overhead expense policy is designed to meet the needs of small business owners. It's an own occupation definition, which is the top-notch definition. And so if the business owner is unable to perform the duties of their own occupation, then the claim they would qualify as being disabled under the policy and can put through a claim. Now, the benefits that are paid under this are based on actual business expenses. So the business will submit their expenses each month, and these expenses will be covered, obviously up to the maximum that the owner had purchased. The interesting thing about this is, as you know, businesses don't always have the same expense every month. The expenses can vary. So one month we may have $5,000 of expenses. The following month it might be $8,000 of expenses. In those months, let's say for example, we have a policy that provides coverage of $6,000 of expenses per month. If in fact you don't use up those $6,000 that month, the unused portion can be carried forward to the next month. So you can carry forward those those expenses, and they would be covered under the overall average of $6,000 per month. The benefits that are paid in the event a claim is put through are taxable income to the company, because you're basically replacing the income that disabled person would have generated. And so premiums for the business overhead policy are deductible expense to the business, but the benefits are going to be taxable because it basically is replacing income that the owner would have generated. So let's look at what is actually covered under a disability business overhead expense policy. Well, first of all, it's going to cover rent, going to cover property taxes that may be involved, any business taxes, utilities, equipment leases. The company may be leasing equipment and have a monthly payment. These are covered. Telephone, internet, legal and accounting fees, any interest on loans, and employee salaries. So all of those expenses are going to be covered under this policy, so that you're going to make sure you can keep the door open and you can keep customers coming in. Now, we need to have someone that's going to be replacing the owner, because if a customer comes in to get their teeth filled and there's no dentist there, we have a problem. So what's interesting on this is that the salary of the disabled owner or the replacement of that owner is not covered under this policy. In addition, new capital expenditures. You can't go out and buy new equipment while you're on claim. And only the interest portion of loans are covered, not the principal repayment of capital. So how come it doesn't cover the replacement employee? Well, the reality is if you have a temporary dentist or pharmacist in there, that individual is going to be generating income and they are going to be paid from that income. So important to remember that disability business overhead expense policies, the owner or the replacement for that owner, they are not covered. In fact, the owners, if they become disabled, they should have their own individual policy. This business overhead policy is to cover the expenses and the overhead for the business.